Yeah, I don't think this is bullish for the vast majority of the altcoin complex, but for the ones that generate revenue will be very nice. And there's fewer of those than you would expect.
Quick shout out to today's sponsor, Katana. We'll hear more about Katana's 1 billion cat campaign later today. But for now, let's get into the episode. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. Blockworks Digital Asset Summit is back in London, October 13th through 15th. We'll have top speakers from leading global funds, financial institutions, DeFi protocols, crypto companies, and policymakers all under one roof. Think BlackRock, Circle, Coinbase, and more. Follow the link in today's show notes to buy tickets and make sure to use code BELL100 for £100 off at checkout. See you there. All right, everyone. Welcome back to another Roundup. You got Michael's 1 and 2, Vance. How we doing, fellas?
Doing good.
Hanging out. Yeah.
What about you?
Not too much. Getting acclimated to Montana. Currently living above my parents' garage. Trying to fix that.
Baller. Big baller alert.
There's good things that happen in garages or basements.
Yeah.
Indeed. Yeah.
The subterranean layer. That's where where all the deep research gets done.
I'm like, is this like Google type stuff, or is this stuff we can't talk about on a podcast? Stuff that happens in?
No. This is like, Strudel. Yeah, it's kind of a big deal, whatever. But like framework, that one.
Yeah, let's go, baby. Can you refresh us? I know we talked about the framework origin story before, but everyone loves a good origin story. What was how did this all happen again? What was the magic?
Michael's parents' basement.
Yeah.
I was the main inhabitant of that basement. Michael slept in his childhood bedroom. I also discovered Michael's Boy Scout outfits, and while I was sleeping around the house.
These are definitely not safe for podcast.
No. Cut that. No, keep that in.
We definitely technically started. I remember reviewing our first LPA draft before we raised any money, like literally sitting on the back porch in my backyard.
Yeah, we lawyered our first fund, and then Michael did the financials for the first year, and they were completely wrong, so we had to redo them.
Well, no, they weren't completely wrong. They were completely fine, but nobody knew what staking was. I mean, this is kind of the crazy part. We go back and talk to existing LPs or new LPs, and they're like, yeah, you guys had this thing, Framework Labs, and like it was building all this stuff, and it's like, why'd you need that? It's like, well, keep in mind there was no Coinbase Prime, there was like ledgers, there was no Fireblocks, there was no accounting system. Like we literally had to build it as we were flying the plane. It was quite an interesting operation.
Mm. I mean, even still today, some of that stuff is unsolved. Like there are frameworks and whatnot, but I talked to I've been poking around at how like protocols do accounting. So I'm like, how does this work exactly? And it's like, it's so brutal. But this guy's take was that even the auditors don't really know how to match up what's happening on chain with what gets reported through SEX or something like that. So if the auditors can't even figure out what's going on, like his thought was that if the auditors can't figure out, there's no incentive to get it like exactly right. There's still so many data problems when it comes to the accounting side of things. So still a big problem.
It's been a journey, but we're here.
Yeah, basically, Michael, you deserve a lot of. As someone who also did the books for the first couple of years of their organization when I was 24, the classics background, I feel you, buddy.
It's better than me doing the books.
Honestly. I was going to say, look, it was better than the other option.
Yeah, I bring the intensity. Michael brings the detail orientation.
Hey, that's what make the magic work. All right, fellas, we should talk about, we got a lot to cover this week, but I would love to start maybe with this blog post that Vitalik wrote, which is low risk DeFi can be for Ethereum what search was for Google. So I'm going to summarize this post here, but basically the idea is he outlines this tension in the Ethereum community for a long time, which is a tension in between applications that bring in enough revenue to economically sustain the ecosystem and applications that satisfy the underlying goals that brought people into Ethereum. And historically, Vitalik talks about how he had viewed these two categories as being very disjointed, especially because a lot of the stuff around DeFi in the early days was, this is the word that he's used in the past. He doesn't use it in this sentence, is an Ouroboros, right? Which is there's not a lot of value being created. These are just, meme coins or NFTs and people are trading them. Yes, it's creating fees, but are we really generating any value here. And he talks about how this framing has changed because just kind of looking at the traction that low risk DeFi, kind of a lot of the borrow lend, basic trading type stuff that's happening is taking off, and how maybe something like some like political meme coins aren't particularly interesting, but a lot of what's happening, particularly on the RWA side of things, actually is starting to provide a lot of real world value, and that could power just drive enough fees to sustain Ethereum. That's my summary. You guys tell me about any nuance that I might have missed that you think could be really relevant, or takeaways that you had, and let's unpack.
I think one maybe like take a step back perspective is let's just think about where Vitalik has come in terms of his perspective of Ethereum, which is he could barely even say the word DeFi like 4 years ago. Mm-hmm. And it was all going to be, Web3, and it was going to be the consumerization of the internet. And we're going to be able to have ownership finally of your own data and data sovereignty. And I mean, we're talking about like borrow lend as the killer feature. Like, so, just thinking about the context of where this narrative and conversation has come from is pretty astounding. So hats off to being able to have the mental plasticity to be able to change your perspective over time. But I do think that, he's hitting the nail on the head in terms of what's working and what's not right now. This is a conversation that we have internally within Framework quite a bit, which is what are the things that are working and what are the things that are not. And the things that are not working, it's pretty obvious, the consumerization. And what I mean by this specifically is more of like the chat or communications applications, like that's not working. Things like social media on chain, really not working. You're not going to be able to have a sustainable model if you don't have some sort of fundamental revenue generation.
Yeah.
And the only thing that is working, there are basically two sectors that have fundamental revenue generation, and one of them is, and some of them are better than others, but I will call them out. One of them is selling block space, and some of them are DeFi and financial primitives built on top of those base layers. Mm-hmm. So basically DeFi and L1s. And I would actually argue, and this is something we talked about this week inside these four walls, selling block space is a really tough business right now.
Tough business.
It's not scaling with the activity. And I think, building chains, like we said, or like we were just talking about, for throughput that was supposed to be filled with consumer applications, but the consumer apps aren't here, and DeFi apps just don't have the throughput. They don't have the needs that you would have with a chat app. And so it's just a different model, and security becomes important, which is one of the reasons why I think when you're moving in the direction of financialization, you don't need high throughput as much. And so that lends credence to Ethereum. And I think that this is the recognition that Vitalik is having. So then within DeFi, what are the things that are working and what are the things that are not? Well, it's interesting, but there's basically two formats that make money, legitimate, scalable money. One of them is trading and one of them is lending. And stablecoins become sort of a wrapper, an application that packages up both of these activities. You could say Athena with the basis trade is really trading revenue, but it's wrapped in a token. You could say things like USDS with Sky is lending, but it's wrapped in a token. But I think those are kind of the two things that you can point to. The problem with, and where I think he's coming from, is what is the thing that has durable, sustainable value? And historically, at least, trading is based on volume. Trading revenues are based on volume. Volume is based on speculation. Speculation has positive and negative cycles associated with it, which makes it difficult to have that durable, sustainable perspective. Lending is something that's totally different. And if we're moving into a world where lending becomes an evaluation of what are the different types of collateral that you can bring on chain to borrow against. And historically, it's only been ETH. And then it became sort of like wrapped BTC in ETH. And then it became other assets that are in Aave that you could borrow against. And we're starting to get further and further out into what you can actually borrow against. And even now, Sky has, I think, $1 billion of Janus Henderson AAA CLOs on chain through Centrifuge. So you've got real world assets on chain that you can borrow against, that are being borrowed against. And I think if you start to look at some of the SEC or CFTC guidelines or their programs, bringing more assets on chain probably is with an emphasis on using them as collateral assets first. That's my read. And I think he kind of hits the nail on the head. And a lot of people are calling this sort of like, this is, one of the most important pieces he's put out. I think time will tell, but it's definitely very aligned with the conversation that we're having internally.
The other thing that I just read is Kang's tweet about Tom Lee's thesis being misguided or whatever. I do think some of it is just a difference in time horizons in terms of if you want to build the world computer, it's obviously going to take a long time to onboard enough assets where it can become that. And I think kind of no matter what anybody wants to say, maybe the tech is better on the L2s or the other L1s, but that's not where the assets are going. And so they're on Ethereum. And I think we will see a similar transition from, it was just like CDP backed lending for ETH. And then it switched to things like Aave v3, which also had a trading component. And obviously the prices of fixed income is going to change, or variable income is going to change every minute, hour, whatever. So there's going to need to be trading volume based around those assets that are just like latent there today. But the lending use case is probably the best and highest use. And I've been trying to craft a tweet, but I haven't been able to really kind of hit the nail on the head. Like there's native trading styles of blockchains that are not really fungible across chains. So like the ETH people love to borrow against their ETH. They don't really want to trade perps. They don't really want to trade meme coins. They used to, but that's kind of gone away. And now it's really like a lending and looping chain. The Solana people are kind of the opposite. They want to trade memes. They have a very short time horizon, but they don't want to borrow against their soul. And kind of that like time preference does disqualify a lot of the RWA issuers from like putting assets on that chain and just like waiting for them to get Lindy and get used. And then like, I think maybe like the hyperliquids of the world, like, they're not as interested in like the CDP based, trading and lending. And so it's probably like that's going to be like a perps exchange, and that's totally fine. But I think when people say like block space is fungible, I generally agree with that. What I don't think is fungible is the activity and native behavior, and then the knock-on consequences of that in terms of, liquidity be getting more liquidity, be getting trading fees. And if you do think of these things as like a world computer type thesis, your time horizon does need to be super long. Like most of the cash flows for these things will be in the far, far, far future. And we're in the bootstrapping phase. And kind of the best thing you can do is just be patient. But as long as people are issuing assets on ETH-L1, I think the thesis is very much intact. And the low risk DeFi, that's a great way to put it. Nobody's ever really traded like that, which is just super unique. Like you put ETH in a CDP or Aave, you draw dollars against it, you loop it, and you just kind of like, you put it there. And every month you check in. Nowhere else does that. And I think that's a bullish thing for ETH.
It just last point on that is on the kind of community or the social elements of each one of these different ecosystems. I think also low risk DeFi gives you the optionality to eventually have the consumerization of crypto happen there. Because if that's where the assets are, if that's where the long-term durable value is, as you increase throughput, as you increase capabilities, that's going to be where the consumer apps want to be. Because it's not going to be like Instagram or Twitter on chain. Like it's going to be something that's an asset-based ecosystem, and blockchains are purpose-built for value transfer. Like we haven't proven yet that they're purpose-built for data transfer, maybe eventually. But at least the consumer apps that work are going to be things that are based around assets, not necessarily data.
Yeah. On the social front, there's I have an old tweet about this, but I think there is something kind of there's a connection in between, social preferences on each chain and then the architecture and design, because for instance, like the looping, it actually makes sense that it happens on Ethereum because it's optimized for the fees are higher than some of the other low cost chains, but the security, they've really leaned into security as a brand, right? And if you look at basically every big financial services company, like security, trust, anything that has to do with money, that needs to be at the core of the brand. But that doesn't actually make a lot of sense for trading, right? Like even a pretty low powered trading application would max out ETH's block space today. So that's maybe why you see it on something like Solana or Hyperliquid.
I would push back on that just a little bit and say you also don't want to be trading on the exchange that has leaks in it. But the only thing is you just physically cannot trade in the way that you want to trade on something that has high cost.
Yeah, totally.
And so there's another element where it's like, if you made the thing that has the trust and the safety and the security faster, cheaper over time, I would imagine people will want to trade there more so than the one that's already fast and cheap and not secure right now.
I think it just has to make sense economically too, right? Like even on Solana's already running into, I think this is why Hyperliquid is successfully competing with Solana right now, is because it's completely optimized for exchange. Whereas my understanding of like, if you're a maker on Solana, you're still very challenged, right? Like you're still placing all these orders and they're stale and you get picked off, and it's faster and cheaper. So you can place those, bids and asks, but you can't, it's not optimized for that. But I'm splitting hairs. My point was that I think it's interesting that, but I'm really glad to see Vitalik. I think it's awesome. I think this whole post was awesome. I have questions about whether or not borrow lend generates the type of fees that maybe search would over time. Like I'm curious to get your guys' sense of that. Like one thing that he wrote that I'm not 100% sure I would characterize in the same way was, he's got this, the analogy for like I'm just reading from the post here. The analogy between low risk DeFi for Ethereum and search for Google is as follows. Google does many interesting and valuable things for the world. The Chromium family of browsers, Pixel phones, their AI work, including open source Gemini models, the Go language, and much, much more. But these things are all negligible or even negative as far as revenue generation goes. Rather, the largest revenue generator, search and ads. Low risk DeFi can play a similar role for Ethereum. The only slight change that I would say there is that all of those things, Chromium, the Google phone, the investment in AI, was directly to reinforce the moat of the search business.
This is the one part that I don't agree with as well. I don't think that the analogy holds when you compare Google search to or search in general to borrow lend. I mean, let's be serious. There's at least up until maybe 2023, there was no better business model than the Google search engine, because you had no other place in the world where you had as much intent at that much volume as they did. And it's really easy to build an advertising business model around that when you've got that much intent and you've got that many eyeballs with that intent. And also, let's be clear, ads are basically zero marginal cost. And so it becomes this cash flow engine where you don't have to do anything. Right. And I get what he's trying to do, which is like, okay, Google search was able to fund all these other things, and Google Loom and all the science and innovations and the things that aren't directly related. I mean, Google Loom is like, let's put internet everywhere, but like all the scientific innovations that they've made and things that I would say are not directly enhancing of the core business model of Google. Google also built all of these different things, like Waymo, for instance, which I think could potentially enhance the business model over time, but that was just an experiment. And so I think I get what he's saying, which is like, let's lean into DeFi and let's lean into lending because it'll fund all these other longer term operations, and that mentality I get, but it's not Google search, because borrow lend is just like a low ROE business, unless you add leverage, and then it gets more risky.
I didn't see this as like as like literal of a comparison. I thought of this more as like, this is the mechanism that we're going to upload files onto Ethereum, and files plus their underlying liquidity. Like, there are so many fixed income instruments. There are so many different types of options, strikes, expiries. Like, how do you actually put all of that on chain? I think low risk DeFi is kind of how, where you kind of blend this CDP derivative fixed income model. And Tarun has talked about this, where he's saying it's kind of like transforming fixed income into variable income, with ETH as kind of the medium of exchange asset. And so I think there is something to that. It may not be exactly what Vitalik is talking about, but there is no doubt that all the RWAs are being issued on ETH today, just because that's where all the liquidity is.
I completely agree with
and last thing I would say is, like, one of our LPs who is long a lot of Solana, I think at least, was asking me, like, what do I think Solana should do? I think Solana should build, not in the L2 way, but build towards ETH in terms of encourage people to borrow against their Solana. Obviously not financial advice, but like, make that asset more money, like, bring more stablecoins onto the blockchain. And one of the things that they're missing is just like a stablecoin allocation protocol. And Yeah, we'll have news on that pretty soon. We're going to be spearheading one of those efforts just to bring more stablecoins to Solana, and I think that's a very exciting path for that chain as well.
Yeah, I agree. I want to. I think I maybe didn't articulate 100% of what I meant here as well, but I think there is a misunderstanding of the intent here as well behind Google. Like, this has been a criticism of Google. Why are there all these side projects? But I listened to a long podcast about this that helped me kind of understand that, like, even these exact products that he's mentioning, like the framing that I feel Vitalik is putting forward here is, hey, let's do our ad business to fund all these really cool things that we could do for the world, like free Chromium and phones. But actually, like, the browser was created because they were really, really worried about getting disintermediated by Microsoft with Internet Explorer, right? There was a direct cost benefit of, like, if you could get this many more people searching, there's a super simple CAC LTV calculation. It's the same thing with phones, right? They were worried about getting disrupted on mobile. So this way of, like, hey, let's do this kind of gross stuff that makes revenue so we could get back to giving free stuff away to the world, like, I think is a pretty serious mischaracterization of what happened.
Somebody's listened to the Acquired podcast recently.
Bingo. I mean, I think the intent is kind of important here, because while I love this direction and I agree with everything that we're talking about, like, Ethereum is completely dominant when it comes to assets. It's that chain where you go when you want to issue assets. It's what's going to win RWAs. What's going to win this use case. But yeah, sometimes I kind of hear this, like, oh, let's do this gross revenue generating stuff so we can get back to the airy fairy stuff. And it's like, that's just not.
Of Ethereum over the last 2 years is, like, you had this perspective of, you guys are just building stuff and nobody cares, or, like, you're building things and it's not related to tangible value, and you're not going to be able to get the spiritual but also sort of the ideological leader of this ecosystem to about face and turn his perspective completely on a dime. It's going to take time. Like, I see this post in a series of, like, at this point, 3 or 4 posts where it slowly shifts into, okay, this is what we're doing now. And the first one where he's like, yeah, look, we're still going to do the nice things and the free things, and we're going to save the world, but in the meantime, we need to do the things that make money so we can fund that.
You do need the save the world ethos. I think that is kind of important to have an overarching mission, but it's good to see that they're just doing something that's a lot more practical and reasonable than what they were before. And I think for just owning the asset issuance layer, like, a lot of people have this model of competition where it's like a prize fight. And you come out of your 2 corners and one of you, like, throws a haymaker and, like, knocks the other guy into the stands, and then, like, the fight's over and you win all the money. I think the more realistic model of competition is just, like, you're just staying with someone. You're trying to kind of not let them get ahead for too long, not get far behind for too long. And eventually that compounds to make the difference in terms of, like, outlasting them or beating them. And I just think, like, it is maybe ETH-L1 is not the best technology stack that we have, although I am, like, super excited about things like quantum resistance. But unless anyone delivers 100x better product, there's no reason to move these assets over. And the 100x better product would include liquidity, it would include speed, feed, decentralization. And so I think kind of by default, they're going to win. And my guess is that market is just very valuable over the long, long term.
Well, it is the definition of a Lindy or network effect market.
Right.
So until something changes and the momentum shifts completely, well, like, momentum is building right now. And until something completely not only slows that down, but diverts it or changes it, reverses it, it's going to be theirs to win or theirs to lose.
I also, part of the reason I think that it's really difficult to stop this train is because I think, Vance, you've talked about the adverse selection problem when it comes to especially asset issuance. Like, not to throw shade, but if you were to look at something like Apollo's ACRED over on Solana, like, that's not, the cream of the crop, right? That feels a little bit more like the Snickle Fritz a little bit. And I think that Ethereum has won already in terms of, if you're serious about moving your asset on chain, you do it on I think it's already kind of broached that adverse selection issue that a lot of chains that are vying for this market are going to face. So I just kind of see it running and taking off. And yeah,
I just see it just slowly grinding up as people realize this. And I think there's a corollary here with, like, a better money for Bitcoin versus ETH. Obviously, Michael, we hold both, but, like, we believe that ETH is a more sensible asset, but Bitcoin is the Schelling point. People just don't, like, maybe they will agree with us in the fullness of time. I think both will be successful. But like if you asked an average Joe on the street, what is digital gold? They would say Bitcoin. It just like once you hit that Schelling point, it's very hard to push them off that stand. So don't fight it. Is kind of where I get to.
This episode is sponsored by Katana. Katana is a DeFi first chain built for deep liquidity and real yield by redirecting chain revenue back to active DeFi users. The 1 billion KAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
Anything else on this, guys, or you want to talk Hyperliquid?
Let's talk Hyperliquid. I've got a take on this.
Hit me.
But well, so this was the week.
Well, let's
wait. Hold on. Let me introduce the post actually. Okay, so there was a post that came out here. Let me get it up on my screen.
Research extraordinaire.
Exactly. John and Hasu. And got him. Thank you to Comfy Capital and Felipe.
Oh my God. I didn't even read this. This is an insane proposal.
Yeah, so summary. I'm just going to read the summary. So we propose the following changes to Hyperliquid's economic model: future emissions and community rewards, FECR, revoke authorization for all unminted hype currently allocated to FECR, the assistance fund, burn all hype currently held in the assistance fund, burn all hype acquired by the assistance fund on an ongoing basis. Max supply, remove the max supply cap of 1 billion hype. Ongoing token issuance, e.g. staking emissions or community rewards, would now increase the total supply. The result is an immediate 45% reduction in hype's total supply. So basically, they go through this and look at it maybe through the lens of like a more traditional money manager. Hype has excess authorized non-outstanding supply. We've talked about this a little bit before. It kind of like how would a more traditional equities investor look at FDV versus market cap, that kind of thing.
There is a perspective on this that I do at least understand the impetus behind, which is where you've got everybody looking at a billion tokens. And so trading at $50 a token, everybody says, oh, it's worth $50 billion. That's how everybody looks at it. And, and when you're an investor, when you're a trader, all you really care about is market cap.
Totally.
When you're an investor, all you really care about is FDV. And that is, I would say, very clearly the dividing line between time horizon or time preference. Because really, like, how many tokens are in circulation? I'm just looking for a quick 50%, 2x, whatever, flip. I'm a trader. But if you're holding for the long term, it's really about what's the durable value, what's the total value. What I agree with on his perspective is in the equivalent of an equity-based company that's publicly traded, there is a concept of authorized shares versus outstanding shares. And what you have in most cases is, and this would be amazing if we can move into this world, but we're not for many reasons, which we can get into. What you have is there's an authorized number of shares, which is defined by the Articles of Incorporation. And the board of directors basically has the decision-making authority to authorize more shares. Maybe you can do a stock split to double, triple, whatever the number of shares, or you can authorize more shares by changing the Articles of Incorporation. That's not an easy thing to do. It's actually a very hard governance thing to do, especially for a publicly traded company. And so what most companies do is they have an outstanding number of shares, which are the number of shares issued off of the total amount that are authorized. And these are for things like employee equity incentive programs, or you want to buy a new company and it gets approved by the board and you're going to issue shares to be able to buy that company. Like, you can use these in productive ways that the board of directors determines to be an accretive shareholder transaction by basically creating new shares. Mm-hmm. And that process, I think, is once again governed by the board of directors. It's a very clear, like, fiduciary duty, laws, rules, and regs, tons of case law around what it means to be a publicly traded board of director. And if you are found to do fraudulent action, like jail time, it's criminal. And so I think that there's a lot of controls in place for that process. And what they're trying to kind of like round peg, square hole, I think, is like, look, a ton of these tokens, they're not being utilized. So let's stop counting them in the FDV. And, maybe they're a part of the authorized number of tokens, but until we actually issue them, like, they don't count. And so they're kind of defined. They're trying to create this middle ground, which is like, okay, we've got the authorized shares at 1 billion. We've got the outstanding shares at whatever the number of like tokens that originates the market cap right now. What if we were to take the FDV and just call it the number of issued shares, issued tokens? So that's my rundown. I think, yeah, there's tons of questions in terms of like governance, who's in charge of it, and it's a mess once you start to pull on the thread. I understand where they're coming from, but I don't necessarily think that we're in a place where this actually matters right now.
Vance, before you could I just summarize, by the way, Michael, because there was a lot like the simple kind of kindergarten version of that is basically what I boil this down to is the hurdle rate for issuing new supply, right? So in the world of even like startup equity, right? You can issue technically new supply whenever you want, but you have to go to your board of directors and they have to approve it, right? It's much more complicated if you're a public company, right? Because you kind of buy some of those shares back, and that's the difference between issued but not authorized, etc. And in crypto, it's almost like you have all of the shares that you're ever going to have been pre-authorized. So to be fair, right, that does lead to some pretty crazy spending that from protocols and DAOs in the past, right? Like, not to name any names, we can all think of examples, but the hurdle rate has been lower for protocols on spending their equity. So I think that's what they're trying to get at here. But
I think there's also like a pretty
wait. Let me do my take. So there's now like this. There's like probably at least two groups of hyperliquid people in my mind. There's the people who are advocating for an airdrop, in October, November. And then there's the people who are like, there's no airdrop ever coming, delete all the coins. Like, you're not part of this thing. There's the people who, were like early in terms of buying the coins. And then there's like the people who are buying at $50. There's like the people who are aligned with like the native perspective of like USDH, for example. And then there's all these other ecosystem actors that want a piece of the pie. You'll see this replayed on HIP3 as well. And even with things like Unit, which I do think has shown some level of favoritism within the hyperliquid ecosystem in terms of they are the canonical bridge. And so like there's all these kind of forces that are like pulling the community apart on top of things like Aster, which are like literally trying to compete with them. And then you have like the unlocks coming, which is kind of part of the Charb post. I think if you are like how Hyperliquid navigates all these different factions coming together is going to tell you a lot about what the end state of the project will be. You also have like the toxic FUD bomb of the unlocks plus CZ going after you. And so I personally think like this is, if you are bullish on the project, probably the place where you want to be buying into the fear. Because if they can outlast CZ and but like kind of unify the community, it's going to be a lot stronger for it. And it'll basically knock out any bear case that exists today.
Yeah. I don't disagree. I mean, it's I haven't seen any of the CZ stuff. Is he coming after Hyperliquid super intensely?
Oh yeah.
Has been since day one.
But like now he's got Aster, which is a Hyperliquid competitor on BNB. Depending on who you ask, the thing either does not work at all or is a perfect replica of Hyperliquid. And so I think, I'm playing around with it a little bit. It seems not quite up to snuff. And the liquidity certainly is not there. But, this is a huge target on Hyperliquid's back. And you also have Lighter, you have GTE. Like Hyperliquid is going to be running the gauntlet for the next, feels like 2 months. So yeah, I mean, you're gonna get to see it all play out in relatively short order, as well as the Sonnet DAT buying, which I think started this week.
I'm not sure if it's officially closed yet.
I know they re-registered. They did some registration, but like that's coming. There's going to be a lot happening in Hyperliquid land, and then HIP3 is kind of the biggest one, which probably won't be this year. It doesn't sound like.
Well, what do you guys think about this idea? Because what do you think about this idea of, I mean, they point out something that at least I agree with in the proposal, which is this max supply cap is kind of a vestige of Bitcoin and the 21 million. And that's a great meme. That makes a lot of sense if you're trying to be a money. Less convinced that it makes sense if you're less of a money, more of a, I don't want to say company, but something like that.
If we want to get into this, then it's sort of like, okay, where's the gap accounting? What's revenue? What's profit? And it's like, okay, well, who's the governing entity, and how does governance work for deciding whether you're going to raise the max supply? Like, you pull on this thread, there's, I would say, a bunch more important things that probably need to come first before we go back to like, how many tokens are there? I don't know. Let's figure out what these tokens actually do first.
Should there be more tokens? 2 billion.
I didn't really put that together. That makes a lot of sense. So basically, yeah, it would force you to formalize things about governance. Okay, yeah, I didn't understand. We should get gap accounting though, by the way. Like,
for sure.
I feel like we could get that independently of.
Let's focus on gap accounting and disclosures when you want to do like, and hopefully, and maybe this is a good segue. We can talk about some of the regulatory stuff, but like, at least disclosures and like accounting treatment and clarity. Like, how does gap accounting work in this world? But all of that leads to, okay, so like, we're going to govern the supply, the total supply, and we can change it. Who is governing it? How does that change happen? Like, I don't really care what the number is. Just like, I want to know that there's controls in place.
Mm-hmm.
So I get what they're saying. It's a good point. I just think there's like 3 or 4 probably more important things to focus on first.
Yeah, we need gap accounting. I will say it's very confusing right now. I mean, the data space is super fragmented. And basically the game has been like, if you can get eyeballs, you can kind of push this.
Look, that space inside and out. What I would say is, and just as important as gap accounting is also disclosures.
Yeah, totally.
Are the founders selling? Have they sold?
Yeah.
That would be good to know.
I mean, maybe a brief detour, but the Clarity Act is starting to take shape. I think they put out a date of October 20th for the next like Senate review period. Just the way that Genius has impacted the up-only nature of stablecoins in terms of being a tailwind, I think the only way for altcoins to really have an enduring run is for new inflows facilitated by Clarity, facilitated by disclosures and gap accounting. It does feel like this altcoin market is basically just in outflow tape, which means that people are just taking money out of the industry and distributing it back to their LPs, which honestly, good for them. I think some of these decisions are being made around liquidity versus the prospects of these projects on an ongoing basis. But the only way to turn that around is to make it equity-like. And, that may be not the cypherpunk vision that we set out to have, but I think that is where we need to go. Like, these things are trading like energy stocks in the sense that it feels like people just don't have a mandate to trade them. And if you're an average pod fund manager, what is even the permission structure that you need to go through to get, permission to trade altcoins? And like, in that whole process, do you make people think that you're so dumb that you will lose your job anyways? Like, you need so much more. You need like a chassis for people to actually get in and understand the altcoin landscape. I think regulation is the only way to get there.
Well, yeah. So let's dive a little bit into that. Post Genius, which I actually don't remember when Genius passed, if that was June or July, but it was this summer. What I would say has happened since is basically a massive Cambrian explosion of activity in the stablecoin market. The largest payment company in the entire world, Stripe, is launching their own L1. One of the largest IPOs in the last probably 4 or 5 years, Circle, in terms of attention and notoriety, and then increase in share price, is also launching its own payments chain. Like, all of the companies that we know and would have expected to be focused on stablecoins have just doubled, tripled down. The other thing that at least we have heard and have some perspective on is that basically every single major bank, and I'm not saying like commercial bank, I'm saying investment banks, merchant banks, commercial banks, all of them are working on some sort of blockchain or stablecoin proof of concept. And many, like more than half of the Fortune 100 who are not financial services businesses are also having conversations at the board level or working on proof of concepts, typically around payments and stablecoins. So all of this is post-Genius activity. This is also, keep in mind, during the summer months, which historically in corporate America is pretty lackadaisical. I think there were a lot of people who were waiting, a lot of companies who were waiting to see Genius happen and get implemented and official. There's also still a long period of time before it becomes effectual. But I would say everybody's kind of like, okay, we know which direction things are moving. At least we can start building in those directions. Imagine that this were to happen for every single other asset within crypto. That is clarity. Market structure for every altcoin. What is a decentralized security? What is a decentralized commodity? What are the rules and regs? Who's the regulator in certain situations? What disclosure regimes do you need to abide by? It makes it possible for the pod shops to be able to buy this stuff because they don't have to go through a DAT to get access to it anymore. They can buy it direct. That unlocking, I think, is a huge element that we don't necessarily kind of think about right now. But it's kind of the one thing that could probably turn the tide for most of these assets who are just going through their unlocks. And, some managers who probably don't have great returns are looking at these assets as, well, at least we can get like 75% of our value back, or, this is something that we're going to have to sell so that we can get our LPs their capital back. Like it is not, up and to the right for a lot of these funds. And if you're trapped with them, on your token cap table, it'll be a long and arduous unlocking season until you're done.
Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion KAT campaign is live. Bridge and deposit directly into Vault in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
I have a question for you guys. I went to this was a conversation I had about a month ago, but I went to the SALT Jackson Hole conference, and I was speaking to a fund of funds, like one of the big fund of funds guys that you guys would know. And I was just kind of poking around like, hey, how are you looking at the landscape from like a manager kind of standpoint? And it's like they're basically a lot of the same stuff that we've talked about in this podcast. Like the good managers are doing well. There's a big fall off after that. But what he was really excited about is like AI. And he was like, look, even like the good coins, in crypto, like just nothing is putting up the growth numbers that AI companies are at the moment, just like absolutely bananas, just real growth metrics. And so sometimes I know these things aren't mutually exclusive at all. I know that's not what you were saying, Michael, but sometimes, we talk about like fixing these things via market structure, like making sure people have access to this stuff and can buy it. But also like these projects just need to be attractive on a relative basis.
Oh yeah. This is with, I mean, just to the two market differences right now, just as an example, there are multiple fundraisers going on currently for AI-based applications, which are not even foundational models, that are being priced Series Bs at 200x revenue multiple right now. Like I know two of them, and
I know a couple thousand X's as well. Like
that's
it
what's
is
happening in AI. So yes, for sure, there are tons of great investment opportunities at 200x revenue. Meanwhile, you literally have, let's say Sky, for instance. Just we have talked about it a bit on this pod. We obviously are excited about it. Sky is currently making 260 million in profit that's being distributed back to token holders and stakers. And I think it trades at like a $1.8, $1.7 billion valuation. That's the tale of that. That is the fundamental difference between access to markets and markets that don't have any access.
Yes, we are not coming to save your random altcoin. We're doing this for the handful of good projects that deserve it. So yeah, I don't think this is bullish for the vast majority of the altcoin complex, but for the ones that generate revenue, it will be very nice. And there's fewer of those than you would expect, but I don't know. People have asked us, do we think there's a bubble in crypto? I mean, altcoins are basically where they were in 2022. There's been no run, for most of them. For AI, that is where it does feel the frothiest. And I think where you see a nice, like graceful combination is things like USD AI, where they are funding GPU build out with stable coins. It's an economic model that makes sense to a team that's, there for the long term. Like there are great projects in crypto. They just get no love because there's been so many bad ones and they've rugged so many people. And like, there will be a day where the AI stuff happens as well on that
Totally.
front.
Always. Yeah.
But for right now, it's just like the giant sucking sound of all the capital coming out of the room. That is AI, no doubt.
Yeah.
And I think that is also why, like, Zero Hedge posted some like M2 versus Bitcoin chart. There's some chart crime that happens in Zero Hedge, but they're like, what has been sucking energy and time and money out of the Bitcoin complex? Well, number one, gold has had a record $82 billion of inflows this year, and number two, AI has just been up only until you kind of see the end of the AI trade, and there will be multiple plateaus, but like the part of the AI trade that's happening right now is the one that fits most naturally with Wall Street. It's the CapEx build out. It's like Wall Street gets excited about the software IPOs, but they really only get into the software IPOs at the last possible second.
Yep.
The CapEx build out, JP Morgan, Crusoe needed $10 billion to build out the Stargate campus. JP Morgan took down the whole thing as the sole lender. Like, think about how much fees that they're making on that. And so the CapEx build out will probably continue on for at least another year. That's at least what the hyperscalers have guided these big CapEx numbers to. But people will front run the end of that with the start of crypto things starting to get research and valuation support from major asset managers.
It's also not zero sum as much as I would say.
Yeah,
It's totally.
that's my point.
We've seen the CapEx build out of AI really supercharged over the last 3 years. Lo and behold, we also went 20,000 BTC to 120,000 BTC. So like they move in lockstep is what I would say. And right now, I would definitely say like gold and AI have captivated audiences. And so right now that's where the attention is, but that could change within a week.
It often does.
Yeah. I can also feel it starting to change. Like I told Michael this on Monday, everyone came back from the weekend. I felt like everyone was a little bit off in terms of, we did the rate cut. Like, what do we do now? Well, there's more rate cuts. That's what's happening. And that only after that
doesn't do too much.
You see the economic activity and the take up. But my sense is that crypto has probably bottomed for now going into Q4.
Yeah, plus or minus 5%, maybe 7%. Yeah. But I look there's one other kind of perspective that I have, which is you've never seen, unless there's a massive correction like a 2022 type thing, you've never seen an asset as big as Ethereum literally bump up against its all-time high, break through it a little bit, then come back down, and then settle back down minus 20%, and then not break through it on a sustainable breakthrough. And I think we are probably right around the corner from that. Could be weeks, could be months, but I think that that's kind of representative of where we are in crypto, which is that we've been consolidating for the last few months. We had to get through an $80,000 OTC transaction in July, and then multiple
not $80,000.
Sorry, 80,000 Bitcoin transaction in July, which was only announced after the fact, although there were conversations about it happening in ECC. But I think then multiple 20,000 BTC transactions were done on chain, which is another crazy stat. So we just had to work through a lot of supply, and I think things will change pretty soon.
Same. That's wild that the market is that big, and I think that 80,000 Bitcoin OTC transaction, it moved the price down like 3 or 4% or something like that.
There's been tens of billions of dollars of selling of Bitcoin specifically. I don't know. You either think that Bitcoin has topped at 120K before the rate cutting cycle has started, or you believe something else. There's really no middle ground. Mm-hmm. I think the probabilities are way better on the more positive side.
So there is a let me steel man the other side, which is we're in a 4-year cycle, and everyone is finger on the trigger, ready to push the big red button the second they get a sniff of we've topped, because they want a top ticket, and they know we're going to head into a absolute crash, 85% crash next year, because it's happened 3 times already. And, that's the plan. That's the plan of attack. That assumes that we are in a 4-year cycle, number one. Number two, that assumes that unlike any other cycle, we topped in August, July. That's never happened before. So like there's a lot of just like, I would say, incorrect assumptions baked into that. And look, I don't think that we're in a 4-year cycle anymore. I think we've talked about this on the pod a number of times.
Yeah.
We probably have broken through that. You even start to see people like Raoul Paul kind of like memory hole the 4-year cycle. I sent this to Van, but it was like he pushed
it back a year.
He pushed it back a year because I can't even remember what he said, but it was like the business cycle was pushed back a year because of like longer duration. It was just like complete narrative violation of everything that he has been talking about. And it's basically like, yeah, I think we've got another year. Going to push my projections back a year. I think 2026 is going to be better than 2025.
It's violating a lot of people's frameworks. You can tell. I mean, it's possible that people already tried to front run selling and maybe are sidelined. Maybe that would explain why
maybe that's
CT
what
is
the consolidation is.
We've had calls with people who say, you know, the cash is in the bank account now. There's no more crypto, and these are people that, you know, are our peers.
I would say a lot of our peers have already sold.
And the American VCs don't. I would say the American VCs put the bottom in on ETH back in the day in 2022, but they don't even have enough supply to really dictate the price anymore. It's just this combo of, if you have the ETFs and the DATs buying the BlackRock ETFs on the same day, be it Bitcoin or ETH, that combo is unstoppable. And when you've got kind of the three-headed dragon of like Joe Lubin, Tom Lee, and BlackRock doing it on a smaller asset, it's even better. Right. And can that happen again? I would say so. People have been fading these MNAVs forever, and they've been partially right, partially wrong, but the amount of monetization that's happened by the ATM has pushed the underlying up.
When someone tells us that, you know, a lot of the peers of your venture group have sold already, thinking that that's like, be careful, like that's a signal to get out. I actually think that that's the opposite. That's a bullish signal, because that means that there's no structural sellers, there's no block sales that are going to go through. And to Vance's point, the triple-headed dragon is literally just like a steamroller, and you should probably get out of the way, because that's going to be buying for the next few years.
SBET having a very nice day. Joe Lubin seems to have cracked the code. So we may be back here, ladies and gentlemen. We may be back. And the last thing I would say on ETH is that there's this. Do you have the unstaking queue?
Yeah.
Maybe? There's been this huge unstaking move. I think it's
2.25 now.
2.5. That's in the unstaking queue.
Yeah. So it's like 2.25 million. It's the highest that it's ever been. I think the other thing to call out is, you know, another person asked me, you know, like, wow, ETH's been really consolidating. What's been going on? It's like, well, yeah, send them this perspective. And basically what's happening is ETH is range bound because you've got 2.25 million ETH that over the last 2 weeks has been slowly rolling off and will continue to slowly roll off for the next month. But at the same time, you've got DATs, you've got ETFs, and you've just got buyers in general who are buying and staking. And the fact that we're range bound and we're unlocking that much ETH is pretty substantial, I would say. Yeah, we can't pull up the chart.
I would bet that ETH has already been hedged partially. Like if you're using 2.5 billion ETH, which is, I guess, you know, mid-teens in terms of billions of dollars, you don't wait for the end of it. You know, you work with a sophisticated counterparty to buy, put, lock in the cost basis, and then you can let everyone in fear, you know, watch you unlock. So I think, you know, when will that chunk be through? Is that still like 30 days or something?
39 more days.
39 days. Yeah.
It's like
it's kind of hovering there, though. Yeah, I don't know if it's good.
56,000 or 50-something thousand ETH every day.
Assume that this has been sold. That's kind of my
hedged, but yeah.
Yeah.
I don't think it really means, I mean, honestly, I haven't spent too much time thinking about it. I don't think this means an enormous amount for price, right? Like I would not read that as.
In 2021, this would have been like, okay, that's it, we're done. Now it's like, okay, means we're going to consolidate for another 35 days as the DATs continue to buy all of that unlocking supply. Like And then it's like there's nobody left to sell. Okay, so what happens when you've got the same amount of buying after the 35 days as you do right now?
It's a sell side liquidity crisis.
Yeah.
Old school.
All right, I think those are most of the big stories of the week. Like, anything else you guys wanted to cover?
Let me review. Tether, 500 billion valuation. It's crazy. They do not need the money. They are so profitable. But I think look, stablecoins are 300 billion now. It's clearly going to trillions. This investment makes a lot of sense. They're not going out to random VCs and being like, hey, we've put our Series D deck together. It's like, no, they're meeting with like princes and heads of state and that type of investor.
I would guess that it's already accounted.
It's already done. But here is, I think, the rub is like with $20 billion, what do you buy? And there's a bunch of interesting things that could be on the table. And I think most of them are probably US centric, given where their business is today and where they want to go. But it is looking like they are going to run the table, and basically be the hyper power law winner. And I would say it's like the only hyper power law winner that we've ever seen that's outside the US, which I think everyone should be rooting for. Like, if we keep making these like Zuckerberg, alien people rich, like it's not really going to do much for us. Like, but if we why don't we give a couple Italians $250 billion? Let's see what they do. Maybe they have different values. And like, even for things like, for instance, Rumble and all the controversial content that happens there that I think is integral to the free speech idea, they're backstopping that.
What's the thesis? Do you guys understand the thesis behind that investment? There was, for context for people, Tether invested some between 5 and 700 million in Rumble, and I think there's a Cantor Fitzgerald connection there as well. But what's the rationale for that? Does that make?
I mean, it's probably it's a distant, maybe fifth or sixth top video streaming platform. They now have a crypto wallet, which is going to be powering a lot of the creator transactions, and it's kind of a more highfalutin version of kind of like the on-chain streaming that we're seeing today. But I think the amount of talent they have, especially on the right wing, which obviously people agree or disagree with, it does give them this very unique position within the US and within the Republican Party. Like, if they're hosting most of the vanguard of the right wing that's been kicked off of YouTube, it's a pretty interesting position that they're in. And if they try to kick, there's no YouTube, rules censorship bullshit that's going on. It's just like a free speech platform, which I think is very cool and is hopefully indicative of other things that they will fund with this money.
So only other comments, not directly related to that, but call out of number one, crypto and AI are now clearly back to back the largest industries happening in the world for tech and innovation. Given that you have two of the two largest companies in their respective areas, being OpenAI and Tether, both valued at $500 billion in the private markets, pretty substantial. Also, the symbiotic relationship, is kind of an interesting one. But I do think that the other call out too on Tether is there's a lot of push into the United States. We didn't really cover this a lot, but in the last, I think 2 weeks ago, USAT was announced, which is the Tether Genius compliant variant of Tether, of USDT. So this will be something that is run by Bo Hines and a large team, from industry and outside of industry that are going to be pushing a Genius compliant stablecoin backed by the Tether balance sheet in a Genius compliant way, which means treasuries as the backstop. But I think the Tether push into the United States is something that we can expect to see over the next 12 to 18 months as well. It's kind of their big, I would say, strategic gap right now. But they're going to be pushing pretty hard.
Well, it's super interesting to see. I mean, I think Tether started with a really interesting market, right? Like, I think a lot of the original product market fit for stable coins, especially USD denominated stable coins, ironically, is outside of the United States. That's who wants dollars in a more unlimited format than the US has allowed them to be exported. So, yeah, I think they're going to do super well. They've got. I was just looking at their. So Tether's got about 175-ish billion Tether out there. That's roughly the same size as their market cap as well, in between 150 and 200 billion in terms of the valuation. You guys might know exactly what it is, but I think there was a range in this report. Or sorry, $500 billion valuation.
500 billion is the value of Tether equity. The number of Tether tokens is
173. Yeah, I messed that up. That's crazy. They're also getting a pretty big premium here compared to Circle. So I think that shows you. I don't have access to their revenue or whatever if that was, but yeah.
This is what happens when you keep 100% of your revenue versus zero.
Yeah, that makes sense.
Whoa.
Shots fired. We got to get Jeremy on here to defend himself a little bit, but
maybe not.
His financial statements speak for themselves.
Find your own podcast.
Awesome. All right, fellas. Well, I think we can wrap it there. But fun one. I'll see you boys next week. Cheers, guys.